taxation with representation has not been such a good idea either. Good morning, everyone. We are here live this April 10th Saturday morning. It's a drizzly, wet morning here in the foothills of North Carolina. It's 59 degrees outside and going to be raining all day. My engineer this morning, Todd. Good morning, Todd. My name is Gilbert Carmona. I am an enrolled agent. An enrolled agent is a person enrolled with the Internal Revenue Service to represent taxpayers in all matters. I'm an accountant, I'm a financial planner, and more importantly than that, you know what I am, Todd? I am a lifeguard. I am a lifeguard. A lifeguard, I swim with the barracuda bankers, the squid and sharks at the IRS, and the seaweed of bureaucracy, just so you don't have to drown in it all. And you can be safe, and your money can be safe, and you can know that you've done the right thing when I do your paperwork for you. That's not a bad job title, huh? I just updated my resume. My name is Gilbert Carmona. If you need to reach me, my telephone number is 828-289-9300. You can reach me at gilbert@gilberttalkstaxes.com. I have two offices, one here in Rutherfordton, 113 Whiteside Road. Another one in Tryon, 226 South Trade Street, the beautiful Art Deco building right off the historic downtown Tryon. It's been a busy week. There's been a lot going on. As Todd said, we were speaking about different tax issues. First of all, let me get into this. We do have a deadline. Tax season has been extended to May 17th. Technically, legally, it was extended till May 15th, 1 month. But the 15th falls on a Saturday. So whenever it falls on a weekend or a holiday, it gets pushed forward to the next business day. In this case, it is Monday, May 17th. Okay? So tax filing for your corporate tax return and your personal 1040 tax return has been extended to May 17th. Okay? That's for sure. We know that is that. And it is not only an extension to file, it is an extension to file and pay for the IRS. Not all the states jumped on board with this. Why? Because it's a major programming thing for them. You just don't move the thing back. You just don't move dates around. There's a lot involved with this because their calculators have to calculate penalty and interest and all this. North Carolina, okay, most of my clients are North Carolina, South Carolina, Tennessee, Georgia, Florida. That tends to be where the bulk, although I do have clients all over the country. Actually, I've got clients all over the world. That's why I became an enrolled agent, because I can represent any taxpayer anywhere that has to file a tax return in the United States. Okay, so that said, North Carolina, you can file your tax return by May 17th, but the money is due April 15th. If you do not pay it by April 15th, there is interest. No penalty, just interest. Okay? They're not the only state. North Carolina is not the only ones that have done this. Other states have done this. So check with your state. I don't want to call them all out because literally they've all got a little bend, a little difference with them. But North Carolina, it is due April 15th. If you owe money, it is due April 15th. Okay, but you don't have to file till May 17th. Okay, and if that's not confusing enough, estimated tax payments are still due April 15th. Those have not been extended. So first quarter estimated tax payments are due April 15th. Taxpayers have a few options, including paying with debit or credit card for a fee. They don't throw that in until at the bottom of the announcement. So the IRS, taxpayers can pay their estimated tax payments by check, bank account withdrawal, or you can use your credit card. However, just know that if you're going to use a credit card, there's a fee. You actually don't do that at irs.gov. If you go to irs.gov to mail your to make your estimated tax payments, you will be redirected to a third-party payment provider that will charge anywhere from 1.96% with a minimum of $2.69, or another one that charges $2.55, and there's some different options. But estimated tax payments are due April 15th, and then they're again due June 15th, and they're again due September 15th, and then January 15th of the following year for this year. So for those of you that make estimated tax payments, this deadline has not changed. And this is major because there are a lot of people that make estimated tax payments. Self-employed people, people that own their own businesses, partners and partnerships that receive a K-1 at the end of the year. This is how they report their withholding through estimated tax payments. So this has not changed. This is a hard deadline, everybody, for Thursday. Now, if you put a check in the mail for the IRS in North Carolina, it is the post-dated on the envelope. It is the post-dated date on that envelope. So if you're going to put it in the mail, make sure, take it to the counter at the post office, or if you have a Pitney Bowes machine like we do, it just puts the date on there. But make sure there's a date on there if you're going to mail it on the 15th of April. So that does count. It is the post dated on the envelope. And the way the mail has been going lately, that is important. I am hearing reports that people are mailing checks and it's taken a month to 5 weeks for them to clear. So it's an important deadline. I don't want to let that by. Now, breaking news, Todd. We need one of those breaking news sound things. Breaking news. And this is major. Form 8962. What people that have, we call it Obamacare. If you have a subsidized health insurance policy, you know that if you made too much money and you have to pay back part of your subsidy here on the tax return, this is where you pay back your subsidy. It's called the Advanced Premium Tax Credit Repayment, ARPA. And if you've ever had the distinction of being able to do that, you know what a painful experience that is. It is capped depending on your income. So some people, the most they can pay back is $800. Other people, married filing joint, the most you can pay back is $1,600. And then there's what we call the Obamacare cliff. If you make 401% above poverty line for your specific situation, because poverty line is based on how many people there are in the household and what state you live in. So if you're 401% above poverty line, you have to pay back your entire subsidy, which can be, I have seen people have to pay back $32,000. I have had people come to me because their tax preparer somewhere else said, oh, you got to pay back your subsidy. It's $15,000, $18,000, $20,000, $30,000. And they come to me like, is that real? Do I have to do that? Yes, you do, if you were at 401%. The funny part about that whole thing, and I've done whole programs about it, is that up until 400%, it's a graduated scale with a maximum of $1,600 or $2,400 or whatever it is for your situation. So you can owe $1,600, but if you make 1% more, 401%, you have to pay it all back. Okay? So anybody that owes, that has to pay it back, any of their subsidized health care, their we forgot, we don't even talk about this anymore. But it still is a thing out there. It was the Affordable Care Act. The ACC, Affordable Care Act, Obamacare. We weren't supposed to call it Obamacare. We were supposed to call it some other ridiculous name that nobody uses anymore. So if you have Obamacare subsidized and you have to pay it back, last Saturday the IRS, after I left here, they waited for my program to be over. They announced they are waiving that because of the Wuhan virus. They are waiving that. So people that have had to pay back their ACA subsidy, yes. Yes, they are waiving that. So I literally had 4 or 5 tax returns that I wanted to review one more time because they were having to pay it back. All of a sudden, that problem went away. Now we're going back over all the tax returns we've already done to see how many people were affected by this so we can amend, so they can get that money back. In some cases, it was only a few $100s. In other cases, it was $1,600. I've only had 2 people this year that have had to pay back their entire subsidy, and they were 2 of the people I was holding to review, and that problem just went away. So they are waiving that. Why they're waiving that, I don't know, but they're waiving it. From what I'm reading, it's because people pulled out money from their IRAs, people were on unemployment, people did things last year, their company shut down, so they tapped into their savings. That's all taxable income. When I say their savings, I'm talking about IRAs, 401ks, SEPs, Simples. People tapped into those, so their AGI actually went up, especially people that pulled out $100,000 because that you could, so people did. They pulled out $100,000 from their IRA. Well, that is taxable income, so that blew them over the 400%, and they had to pay back their entire subsidy. So to prevent that problem, they just waived the entire payback. So if you already filed your tax return and you had to pay that back, just know that you can amend your tax return and get that money back. It's been waived. So, and it's retro back to, April 3rd. So it was last Saturday. As of April 3rd, message 2613 has been removed, and now any tax return with the advanced premium tax credit can be filed. What our software did, and most people's software, I'm going to assume, did this, is when March 11th, when this act got passed and what's his name signed it into law on March 11th, this was in there, but we just didn't know how the IRS was going to handle it. So the software stopped the e-filing of any program that had, or any tax return in the program that had Form 8962. That is that form mandating the payback. So that's why we had those for review. But anything before that was already filed. So we're going to go back and we're going to look at those and see anybody who had that, know you've got a refund coming. Now, if you were a person that had to pay back your entire subsidy, you've really got a refund coming. You've got a big refund coming. So now, at the end of this announcement from the IRS, it says, this is my next topic, the IRS has not yet released guidance on returns that were previously filed with an advanced premium tax credit repayment included on line 29 of Form 8962. Okay, does that sound familiar to you, Todd? The IRS has not yet provided guidance. Okay, passing the law and implementing the law are 2 separate things. As we discussed last week, unemployment is not taxable. They made that decision March 11th, and we had already, and when I say we, I'm talking about America, we had already filed, I can't remember the exact number, around 50 million tax returns had already been filed. And it just shows you how out of touch they are there in Washington. They asked people to stop filing tax returns till they could sort this all out. Hold off for a month or 2. Nobody's going to do that. People want their money. I don't know what they're even thinking, the people that said that. But anyway, the people at the IRS said that, so hold off. So nobody held off. Everybody filed. There's 50 million plus filed. So if you had unemployment in 2020, and I had discussed this in several programs, unemployment is taxable. People did not have withholding. So a lot of people owed money because of it, or their refunds that they normally get were much smaller because of this. Form 1099-G, unemployment income, you got that form, went on your tax return. The IRS waived the first $10,200, so they made it non-taxable. Okay? So all the people that already filed their tax returns, our question is, do we amend to get that money back? The IRS said, no, do not amend. We are going to go through these millions of tax returns, pull out the people that had Form 1099-G, go ahead and make the change and give them a refund if they have a refund coming. Okay, so of course they're going to have a refund coming. It's $10,000 is not taxable. If you're in a minimum tax rate of 10%, that's $1,000 they owe you minimum. But then many of us in the tax return preparer community were quick to raise our hands and go, pick me, pick me, pick me. And then we said, What about where that $10,000 affects other credits and affects other things because it's taxable income? One thing affects another. So people that have earned income tax credit, people that have child tax credit, people that have education credits, even people with Obamacare that I just talked about, because that is taxable income. It does affect that poverty line calculation. Okay? What about those people? They're going to get more back, way more. As a matter of fact, yesterday, Christy had a caller, called her, wanted some help and said, what do we do about this? How much money am I going to get back? So Christy opened up that person's return, and not only were they getting back the $1,000, they actually had an increase in child tax credit. They had an increase in EIC credit. They were getting back about another $2,000, $2,500, $2,000 and change, something like that. They were getting back. So the IRS has asked us not to amend. So this is, I made an executive decision about this, and I'm good at making executive decisions. What was interesting about it is Christy was on the phone with the software provider who was guiding us through some things, and they liked my executive decision, and they said that really seems to be the way to go with the people we were talking to. What I've decided I'm going to do for everybody that had unemployment is I'm going to wait for the IRS, which this process is going to start end of April. People are going to start seeing their money coming from the IRS in May. I don't know when in May. They just said May. May's a long month. Okay, May's a 31-day month. Okay, long month. So we're going to wait till they get that money back. Then, and we know who you are. If you're my client, we're reaching out to you already. Emily's putting together an email that's going to go out Monday to everybody, explaining what we're going to do. But we're going to wait, and it's quite a few people. We're going to wait till the IRS sends you a letter and or a check, and then I'm going to recalculate your return and then file an amended return based on that information. Why am I going to wait? An amended return can take up to 6 months to process. Typically they take over 4 to 5 months, sometimes longer than 6 months if they're complicated. That's just on a normal work day amended return that we send into the IRS. I put it in my follow-up calendar. And I follow up with it in 3 months. Usually they can see if it's posted and in the system, and then I follow up again after another 3 months. So it's 6 months, okay? And I always mail them certified mail with a tracking number so I can tell the date they got it. Because again, these amended returns are complicated and they take a while, and a lot of things happen in the meantime. So those of you that are affected by this, do not, I'm going with the IRS on this one, do not amend your tax return. Wait. Because if you amend your tax return too early and your calculation is not correct with the number the IRS is going to come up with, you're really going to have the proverbial can of worms to try to sort out later. Because now you're compounding issues. Now you've got a miscalculated 1099-G, and you've got the credits miscalculated that go with it. So we're going to wait to see what they do, and we're going to take it from there. Okay, so that is advice for everybody. Wait till you get that letter from them. Now, on the other hand, what are we going to do with all the people that have the advanced payment tax credit? Because the IRS has not said a word about that. That is potentially bigger than the other one as far as money the IRS is going to have to pay back. I have no idea what the numbers are, but I know that a lot of people have to pay back their Obamacare subsidy, at least part of it. I mean, it's a huge, huge number every year. It's a huge problem because of the way the thing is calculated. So, and a lot of people, because of the virus, a lot of people worked overtime. I've had people that worked last year more. I thought it was supposed to be the other way around. People weren't going to be able to work. I've got people that worked because of overtime and bonuses and shift differentials. I've got people that made huge amounts of money than they did, and they worked unreal. Todd, we are behind on breaks. Let's go ahead and take our first break. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.
Hi there, this is Kimberly, and I'm here to tell you about Peterson's Auto Service and Detail Shop. As a woman, I'm often apprehensive about taking my car to a dirty service garage. But you can be assured that Peterson's, located at 478 Butler Road, Forest City, has an incredibly clean and safe environment where you get high-quality service at a great price. Peterson's was voted Rutherford County's best auto service 3 years in a row. So take your car to Peterson's for brakes, oil change, North Carolina inspection, tire rotation, headlight lens restoration, scratch removal, and meticulous auto detailing. That's Peterson's at 478 Butler Road, Forest City. You can call him for an appointment at 245-8889.
As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous.
We are back. Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. Those of you live streaming, I didn't welcome you this morning. Sorry, I just got right into it. I had things to talk about. Those of you live streaming us, www.wcab59.com. You can see me in my vintage. Boy, they used to wear them wide back then, didn't they? Huh? This is an old school Nautica tie, circa 90s. Wide and orange. Great for the spring day. And yes, my hair looks fabulous. We've got to get a new commercial for Peterson. He's moved. He's officially in his new location over on 64, right up the street. I don't know the address or anything. I know where the building is. It's beautiful what he's done there. He is just a meticulous person. He's like somebody who pays attention to details. Boy, he gets it right every time. We need a new commercial for him. So welcome to your new shop, Peterson. And he sold his old shop, and he is open for business over there. I need to get up with Kimberly and have that done. So my name's Gilbert Carmona. I'm an enrolled agent. I've already gone through all of that. If you need me, my office number is 828-289-9300. You can send me an email, gilbert@gilberttalkstaxes.com. And real quick, I wanted to say that I got a Northland Cable. Those of us here that use Northland Cable, there's been a spam email message been reported that there's currently circulating. It appears to be sent from Northland Communications, and it's a good one. It looks very official. It looks like the real thing, and they're asking you to update and secure your account. It's a phishing attempt. Keep in mind, Northland Cable wanted me to just let everybody know, keep in mind, they would never temporarily suspend your account because of an update and a password and having to reset your password. They would just never do that. They're not going to interrupt your communication. They're not going to interrupt the fine service you're getting from Northland Communication. I have them. They do a great job. They're just very good. We never have problems with them. But this email's going around telling you to update and secure your account, giving you a link. When you click on the link, you're going to loose a world of hurt on yourself. It's got spam and all kinds of stuff in there, and it can compromise your computer. So Northland Communication is not, those emails, are not from them. So if you get an email, ignore it, delete it, get rid of it. Whatever you do, do not open it. We talked about the repayment, good. We talked about the update, good. We talked about the deadline date, good. If you have any questions on any of this, please send me an email, gilbert@gilberttalkstaxes.com. I'll reiterate. I have been talking about estates and trusts, executors' roles after a person passes away, tax return requirements, what you've got to do. I've been getting into this a lot lately because it is an issue. We are, here we've kind of become more of a retirement-centered community. between Tryon and Rutherford County, a lot of people are coming here to retire for obvious reasons. It's a beautiful place. It's a peaceful place, and people just love it. Between the climate and the people here, it's a great place to live. So people come here to retire, and then you have these issues that come with that, and I get a lot of these in my office. So I really want to just even to touch on it a little bit every week, because it's a complicated issue. Last month, we had a client that had passed away. 2 years ago, the executor came to us and said that my family member just told me I'm going to be executor, and I say that, let people know let your executor know. Now, in North Carolina, we use the word executor for male, executrix for female. In other states, there's different words: trustee, fiduciary. It's all the same thing. It's just a different title, different name, but it's basically the person that's going to take care of your estate. It's going to take care of your will and make sure that all the things are done. Because believe it or not, it is not the lawyer that is going to do this unless you've instructed the lawyer to do that. But the lawyer that drafted your will is not just automatically. Somebody actually told me they thought that. Says, well, my lawyer drafted it for me. If anything happens to me, my lawyer. I said, your lawyer doesn't even have a copy of your will. They gave it all to you. It's your job to even make sure that your will is secure. I've had several stories come across my desk of people that the will has disappeared. They had one executed copy and nobody knows where it is. Nobody can find it. They've looked through everything. Nobody knows where it is. So that's not, just having the will. Your people need to know who's involved. So the person, try to be really as vague as I can on this. The person told the person that was going to be the executor, you're going to be my executor, and signed all the paperwork with the attorney and did all that. Well, the executor came up to me and said, we're going to need help because I have no idea. This person has an IRA, this person has a 401k, this person has this, that has that. What do we do? So I did what I do best, and that is I put a plan together, and we executed that plan. Okay, so I put a plan together, got all the assets together. Now, that was for this person, their plan. I'm not telling everybody to do this, but this is what I did for this person, because every plan is individualized. Put all the assets together, got everything together, and got a hold of it all. So it was all made sure the first thing I did is make sure all the beneficiaries were correct. They were current and valid, and it was who that person wanted to get the assets, get the money. Make sure all the beneficiaries are correct. That is the most important thing you can do. You don't want to have a deceased beneficiary, and it happens a lot. They have a beneficiary that's deceased. You don't want to have an ex-spouse as a beneficiary. That has happened. Okay? You don't want to have, you're in a second marriage. You don't want any assets to go to the first spouse or the children of the first spouse that were not your children. All these things have to be addressed, believe it or not. So in this situation, because I always tell you the bad stories where things weren't. This was actually a really good story. Things went really well, and I just want to show you the power of being prepared and the power of thinking this through ahead and having it ready. So we did everything, made sure all the beneficiaries were correct, made sure all the plans were how that person wanted them. The person was in bad health at that time, but it wasn't so bad. And the person was, everything was good. Well, in the next 2 years, the person's health really deteriorated, really bad. The person passed away. Because I had done all that work and I had everything there and I had everything current and I had all the files and everything, I immediately executed all the transfer paperwork for the beneficiaries, had a laundry list of things that needed to be done for the executor. We were invited to a dinner at the Receiving of Friends, and I went up to the executor was there, and I said, look, I don't want to talk shop right now, but we'll talk about this later, but I just wanted to let you know I did this, did this, did this, did this. The person looked at me and said, thank you so much. I'll be by your office tomorrow, made an appointment, set up an appointment, came by the next day, signed all the paperwork, it was all ready. Beneficiaries had their money in 7 days. Okay? And it was just because of a little, really not even that much looking back, a little planning, a little forethought. Because believe me, they needed money. They had a funeral to deal with. They had burial costs to deal with. They had all kinds of loose ends, financial loose ends, medical bills, just the list goes on and on. So everything was executed, everything was ready. We had an answer for everything, anything that pertained to me, you know, what I have control over, and had another list of questions for probate, had all that paperwork ready, just had everything ready. And that is what is important. And the scripture that I want to share, because there really is a scripture for this, and Christy, my wife, is the one that pointed this out to me many years ago. We were helping somebody who had with their estate, and Christy said, you know, that person has oil in their lamp. And I said, they have oil in their lamp? And she said, yeah, Matthew 25. She said, that person has oil in their lamp. And that person did have oil in her lamp. She really was ready. She wanted to help her family. She wanted to help her granddaughter. She wanted to do this, wanted to do that. And she had planned. And I'm going to read this real quick, and we're going to take a break right after it. But Matthew 25, it starts in verse 1, it goes on to 13. Then the kingdom of heaven shall be likened to 10 virgins who take their lamps and went to meet the bridegroom. 5 of them were foolish, thoughtless, without foresight, and 5 were wise. They were sensible, they were intelligent, they were prudent. And when the foolish took their lamps, they did not take any extra oil with them. But the wise took oil along with them, so they had oil and their lamps. And when the bridegroom was running late, he was slow in coming, they began falling asleep, and they all fell asleep. Around midnight there was a shout, behold, the bridegroom's coming. Go out to meet him. So all the virgins got up, they got their lamps in order, they were trimming their lamps, and the foolish ones realized they had no oil. And they said to the wise, give us some of your oil, for our lamps are going out. But the wise replied, there will not be enough for us and for you. Go instead to the dealers and buy some oil for yourselves. And while they were going away to buy the oil, the bridegroom came, and those who were prepared met him and went into the marriage feast, and the door was shut. Later, the other virgins came back, and they said, Lord, Lord, open the door to us. But he replied, he declared to them, I do not know you. I'm not acquainted with you. Watch therefore, because no one knows the day or the hour when the Son of Man will come. And no one knows the day or hour when you're going to die. And you need to be ready. You need to be prepared. And that's why I do what I do, and that's why I want to talk about estates and trusts and really help people get ready with this, because this is an important issue. It's an important matter, and it's not just that you're being organized for the people that are going to take care of this after you pass away. It's just the peace of mind that comes with knowing that the things you want done with these assets that you've worked so hard for and that you've spent so much time, putting together and having, you want to make sure that those people get them, the ones that you want, the ones that you care about. So that's why we're talking about this. Let's take a break, Todd. We're running just a little behind schedule here. Let's take a break. We come back. Related to this matter of estates and trusts, I'm going to talk about something called basis. The value of your trust, the value of your estate, and how we come up with that value. And there's this topic called basis, and it's created a lot of problems for a lot of people. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9. I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City.
They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite. This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300.
We are back. Gilbert Talks Taxes, WCAB AM 590, FM 100.9. Those of you live streaming, www.wcab59.com. Good morning. Thank you for tuning in. We look great here in the Blue Room, Todd and I. And those of you that are going to catch this later on YouTube, they do rebroadcast this, and we put it up, and it looks great. And I get a lot of phone calls from people. Now I'm at that level now where I have other professionals calling me, asking me questions. That's when you know you're having impact. When people call you and then they tell you who they are. Before I get into basis, we were just talking, because I talk taxes. This is what we do. We were talking taxes are going up. The Reuters staff issued an email. This got put in my things to read stack, and there is, I mean, they're going to raise corporate income tax is going to get raised. Okay, it's going to get raised to 28%, and although they're saying that it's lower than the 35% that we had before President Trump was president, they're saying, oh, we're still way lower than that. Well, no, just wait. I mean, it's only been 2 months. Just sit back and wait. And there's talk of a minimum global tax on U.S. companies and an international tax, and they want to reverse what they call the race to the bottom. In other words, no, we need to raise taxes, not lower taxes. No, it's the other way around. They don't get it. They just don't get it. They're raising taxes on all kinds of things. And the worst tax that I'm concerned about is where this whole gig community thing, Uber, Lyft, and artists and people like that, freelancers, they really are going after them. And it was almost like, you remember when they used to go after waiters and waitresses, like they're really making that much money. Try spending less money in Washington. Stop going after people that live on tips and spend less. I mean, they want to talk about making their deficit and all this. Well, has anybody over there thought about spending less? They just spent $5 trillion, so they're going to raise taxes on everything else. It just doesn't make sense. It just does not make sense. Okay, let's talk about basis and what basis is. So you hear a lot of talk about step-up basis, and I've watched videos and I've read information where they're giving you retirement advice, or they're giving you financial planning advice, or they're giving you whatever advice, and they keep referring to stepped up basis. We're going to get a step up in basis, and they make the assumption that everybody knows what that even means, what we're even talking about, stepped up basis, and the impact that has on an estate and a trust and inheritance, inherited money you're passing down, even spousal money. Stepped up basis is huge. So I'm trying to lay a foundation, and I'm going to make this as plain as possible. Don't call me with all the technical, the 30 what ifs, because I'm just trying to get a foundation so everybody's on the same page. And I'm going to try to build on this and discuss on it more as we talk about estate planning more. Okay, so the step up in basis at death is a critical financial concept to understand. Okay, it affects investing, it affects estate planning, it affects asset protection, and it affects tax decisions. Really, these are lifetime tax decisions when we discuss basis and what stepped up basis is. Okay, people that are not aware of it can overpay taxes by tens and even hundreds of thousands of dollars. Okay, so what is basis? Okay, tax basis is what the IRS considers you to have paid for an asset. Now, and we're talking here about assets that appreciate. Okay, typically we talk about real estate because that is something that people own, a lot of people own, that appreciates, goes up in value. Okay, anything that goes up in value, we want to know what the basis is so that we can calculate the tax. Now, the normal thing that affects most people's real estate, but you also have vintage cars, art collections, coin collections, furniture, antique furniture collections, jewelry, again, vintage jewelry, gold, silver, things that appreciate in value, okay? And even more rarer, you don't find them, but I've had them across my desk. Patents. Somebody could inherit a patent. Somebody could inherit an interest in a business. Somebody could inherit an interest in anything, a mining operation. I've had that one. So these interests appreciate. What's important about that is we need to know what the basis is, because when you sell an asset that has appreciated, you owe capital gains tax on the difference between the basis and the value on the date you sell it. Okay, capital gains tax. And then I'm just going to hit on this. You have short-term capital gains and long-term capital gains, and they're taxed at different rates. Okay, short-term is anything less than a year. Long-term is a year and longer. Okay, they're taxed at different rates, and they're taxed at different rates. Let me just say that. I don't want to overcomplicate this discussion because you get into timing a sale. I actually had a client that had to pay. I've actually had several clients that have had to pay. One had to pay $20,000. Another one had to pay $16,000 in capital gains tax more than they should have because they did not time the sale of the asset. One of them just had to wait 1 week, just 1 week, and they would have saved about $16,000, if I remember right, somewhere around there, in taxes. But they were under a lot of pressure to sell. It was a big asset. There was a lot of money involved, and there was a lot of people. But they could have waited 1 week, if we found out later. But they didn't get me involved till after the fact. So that's why I'm trying to have this conversation now, and I want to lay this foundation about basis, because we want to be Matthew 25, 1 through 13. We want to be the wise virgins, okay? We want to have oil in our lamp, and oil is understanding what this means and what this is. So basis is what you paid for the asset. When someone dies and they leave an asset to an heir, the tax basis resets to the value on the date of death. So those of you that have come to my office know I'll ask you, what's the date of death value? What is the date of death value? That is a key concept. Another thing that also has cost basis are life insurance policies. They can actually, it's not the policy itself, but what's in the policy, these whole life policies, they can have a cost basis also. So what is the value on the date of death? That could be bad if the asset has fallen in value because the date, between the date that it was purchased and the date of death, because taxable losses cannot be booked. So you cannot book a loss, you can only book a gain, okay, in basis. But generally, it's a good thing because it generally just depends. If it loses value, then it affects the won't have the capital gains with the heirs. But again, so here's an example, typical example of what happens with cost basis, something that I see happen a lot. And then I'm going to talk about some cost basis mistakes that I see and how to avoid them. Okay, so Uncle Marvin. Let's talk about Uncle Marvin. He actually, classic, I'm holding my hands up. Uncle Marvin, this just came to me. Uncle Marvin had a house and 40 acres up in Sunshine somewhere, up over by there. He had it. He had lived there for 40-something years. Okay, so cost basis on it for Uncle Marvin was like $40,000. Okay, when Uncle Marvin died, that real estate with that house was worth this side of $400,000. Okay, his heirs that inherited that property, which they went ahead and sold it. And another reason why this is important, 80% of all homes, and this is going to go into what I'm going to talk about now, 80% approximately of heirs will sell the assets. Most heirs want the cash, which I know is heartbreaking for some people because, and I have them come to my office and they want to do things because they just know that the granddaughter loves their house and their granddaughter's going to want to live in the house. No, wrong. 80% of the time, the first thing they're going to do is sell the asset. So that's what makes this such an important conversation to have. So Uncle Marvin, the house is worth $400,000. So his heirs, in the date of death, the date of Uncle Marvin's death, the attorney had an appraisal done because there were 5 heirs involved, and the attorney wanted no complications, wanted everybody on the same page. So he went ahead and paid to have an appraisal done, which is very wise. Appraisals cost $300 to $500, depending on, the asset, whatever it is. He had an appraisal done, so he had it in writing that the house was worth, on the date of Uncle Marvin's death, $400,000. Okay? That is now their basis. So they turn around and sell it. Let's just say they sell it right at the $400,000. They had zero gain. Zero. No gain. But let's just say Uncle Marvin dies. It takes 5, 6, 7 months for everything to get settled out. They're going to maybe do some repairs to the house. It needed a roof. It needed whatever, some cosmetics. They're going to go ahead and take a little bit of the estate money and fix it up. Okay, that increases the basis. So the new basis is $400,000. Let's say they put $20,000 into it. Now that house's basis is $420,000. Okay, but in those 6 months we have a real estate boom, and we really did have a real estate boom. They sell the house for $520,000. They're going to have to pay capital gains on that $100,000. They had a step up in basis, okay, which really was great because if they would have not had that step up in basis, they would have had Uncle Marvin's $40,000 in basis, and they sell it for $520,000. Now they'd have to pay capital gains on that difference, that $480,000. So you see why this is huge. It's the difference between paying taxes on $420,000 or paying taxes on $100,000. And I see this all the time. I've got a complicated one right now involving land with just cost bases spread out all over across 3 generations. Yeah. Let's take that last break, Todd. Come back, and I'm going to talk about common mistakes I see people make with basis in estate planning. This is Gilbert Talks Taxes, among other things. WCAB AM 590, FM 100.9.
People come up to me and say, Gilbert, thank you for doing my tax return, and thank you for getting me that big refund. Do you have any ideas what I can do with that refund? Oh, yes, I do. Take that refund right over to NC Tractor and Farm Supply, talk to Phil, get you a brand new shiny red Massey Ferguson. That's NC Tractor and Farm Supply, Railroad Avenue. You can call Phil at 828-429-5008. By the way, mention you heard it on Gilbert Talks Taxes. I'm hoping he'll give me a discount when I go buy my brand new shiny Massey Ferguson tractor.
When you get a hankering for lunch, remember Jesse James Railroad Express. They have a menu full of delicious items such as burgers, chicken salad croissants, fresh salads, hot dogs, taco salads, and much, much more. Don't forget the refreshing drinks like milkshakes, Coke floats, or hand-dipped ice cream. They are now serving French fries and onion rings. Hours are Monday through Saturday, 11 a.m. until 4 p.m., closed Wednesdays and Sundays. For takeout, give them a call at 828-447-4644, located at 531 Railroad Avenue in Rutherford. Don't forget, Mondays only, 99-cent hot dogs with mustard, chili, and onions. That's Jesse James of Railroad Express. All aboard.
We are back. Gilbert Talks Taxes, WCAB AM 590, FM 100.9. All aboard. We're going to go all aboard. Now, he's not open for breakfast now. I know. It is sad. It's a sad day. No, what am I going to do for donuts and coffee after the program? Okay, question. Had a question here. By the way, if you need to get me at the office, 828-289-9300. Send me an email, gilbert@gilberttalkstaxes.com. I do have a fax machine, too. Somebody asked me, because I fax the IRS things all the time. Somebody asked me, can I fax you my question? I'm like, sure. I'd love you to fax me a question. But you can call the office. So I'm going to stay on this cost basis thing, but somebody called. If you are an individual retired and you owe taxes, do you have to pay before April 15th, or can you pay in May without interest? Okay, this is the confusing part. And let me explain it one more time. North Carolina, if you owe North Carolina, you have to pay them by April 15th or pay taxes. The federal government, the IRS, they are May 17th. No interest, no penalty till May 17th. And that's what makes it so confusing. We have two different dates for two different entities. It's supposed to all be the same date. Keep it simple. It's been that way for the last 25 years I've been doing this. And it is confusing. So you're not alone. April 15th is only for North Carolina. Okay? You have to pay North Carolina by April 15th. If you pay North Carolina by May 17th, you're not going to pay a penalty, but you will pay interest. Okay? But there's no penalty. The penalty is going to kick in after May 17th. The IRS is May 17th. Okay? Now, if you're an individual and you're retired and you owe some taxes, it's probably, I can't imagine it being a lot, because it's probably pension or retirement income. But yeah, if you can get that check in the mail to them April 15th for North Carolina. Okay, those of you that are picking this program up online or listening to it on my website, and you're in a different state, a lot of those people, check with your state. They're not all the states are on board with the IRS. Many states are sticking to their original dates. They're not changing for a number of reasons. Some of them just say it takes too long to reprogram their computers. They're not going to do it just for that little 30-day thing. It is what it is. Pay it by April 15th is what they're saying. So check with your state. Many states are not on board with this, okay? And North Carolina, I meant to say this earlier, Todd, with the unemployment, North Carolina is taxing unemployment. So it's only the IRS that's waived the $10,200. North Carolina is not doing that. You owe that income, because the people that are calling me are like, well, what about North Carolina? That hasn't changed, and that's not going to change. Most states are not waiving unemployment that I'm aware of, that I have to do with. The states where I have clients, I can't think of one that has waived it. There may be. I'm not saying there isn't. I can't think of one. Typically, like I said earlier, the states I deal most in is North Carolina, South Carolina, Tennessee, Georgia, Florida. I've got clients in Alabama, Illinois, Maryland, Connecticut, California, Oregon, and of course Texas, the big state. And a lot of my California clients are moving to Texas. It's like a migration. You remember the westward wagon trains that all went to California? Well, they're now packing up and moving to Texas. And they're leaving. Hundreds of thousands of people have moved to Texas. Why? Why move to Texas? 2 words, Todd. Lower taxes. Right. Let's get back to stepped up basis. Okay. I'm going to have to get into this again next week, because this is a big topic. There's a 6-month rule of establishing basis, and that's going to be a whole program just to talk about that. I'm going to talk about, I've got 5 minutes left. Todd, you'll give me the 1 minute, finger telling me it's time to wrap up. I see people make a lot of mistakes with basis. Okay, so I've established what basis is. Basis is the price you paid for the asset. When a person dies and their heirs get that asset, they get what's called a step up in basis. Okay, and that's basis of what it's worth at the date of death. Okay, so Uncle Marvin bought his house for $40,000. The day Uncle Marvin died, the appraisal said his house was worth $400,000. Uncle Marvin lived there forever. Okay, $400,000. That's a real case. That's a real scenario. That really happened. Uncle Marvin's house was worth $400,000. House in 40 acres, I believe, 30 something acres. And his heirs now, their basis in that asset, his 5 heirs that got that, was $400,000. Okay, I see people make mistakes, and that's a great thing right there. That's beautiful. His heirs are going to pay no taxes when they sell that property for $400,000. If they sell it for more than $400,000, they'll pay capital gains on the difference. Okay? Now, I have seen some things undermined this step up in basis. One of them, and I call it the deathbed gift. Okay? Grandpa, grandma are wrapping up. They're ill. They know they're not going to live too much longer. They're as it says in the Bible, they're getting their house in order. And they decide, and really several financial planners I've had this conversation with call this the worst possible thing that can happen for an heir. Okay? And that's to take a low basis asset and pass it on to an heir with the low basis. And here's how it typically happens. Let me go back to Uncle Marvin. Let's just say Uncle Marvin's got his $40,000 basis in his property. Uncle Marvin knows he's short for this world. He calls his heirs in and he said, I'm going to go ahead and put your names on the deed of my property because I want you to have my property because I know you're all going to want to live in this house as long as I have. The house that he bought 40 years ago and hasn't remodeled since. Okay? So they don't know. They're not tax preparers, accountants, or enrolled agents. So they just say, okay, great. And he does what's called a quit deed or some other instrument like that they just do themselves typically. And they'll go send it down to the courthouse and have it recorded. Or they may get an attorney involved who really does not give tax advice and does not know and really doesn't care. He's just doing what he's told to do. So he files his paperwork. Well, what Uncle Marvin just did is he just passed his $40,000 cost basis onto all those heirs. Their cost basis is now $40,000 in an asset that's worth $400,000. So when they sell that asset, which they're going to sell that asset, especially when you have, if you give it to one heir, maybe they might move into the house, but you're giving it to 5. 3 of them didn't even live in North Carolina. What do you think they're going to do? They're going to sell the asset, and they want the cash. So I call that a deathbed gift because that's usually when it happens, and mostly I see it with homes. They'll put a child's name on it. You know, again, they're we're talking about an older parent, so it's an older child. Their name on it. I actually had one where the father and mother insisted on putting the daughter's name on it. Had the paperwork drafted. They were literally signing the paperwork, and the daughter's husband looks at everybody and says, has anybody called Gilbert and asked him about this? And the wife looked at him and said, no, I didn't even think about calling Gilbert. And he said, before you fill that out and take it to and have that notary guy sign it, can we just call Gilbert? I told them absolutely not. It would have cost them their basis, they would have lost about $300,000. It would have cost them $65,000 to do that signature because of stepped up basis. And she would have lost her stepped up basis in this asset. So at least the husband had enough. So this is important. I'm going to talk about it some more. Todd's telling me we're out of time. Program is Gilbert Talks Taxes. I will be back next Saturday at 8 a.m. right here, WCAB AM 590, FM 100.9.
The music's on us on WCAB.
This is WCAB.